Good, good, good morning. Good morning, YouTube. Hi, how are you doing? I am Grady on the chart, and welcome back. Welcome back. Welcome back. Not welcome back to you. Welcome back to me. I've been away. I've had some technical issues after the long weekend. I've tried to make a few upgrades to my system, but if you know, anytime you try to improve in life, there's always something, someone, some situation. There's always going to be friction. There's always going to be setbacks. There's always setbacks before you move forward. And so we're not going to let that. We're not going to let that hinder us. We're not going to let that stop us. We're going to do our thing, and we're going to get on these charts, and we're going to enjoy ourselves. Hey, check this out. Um, I was going to sit here and I was going to do a little bit of this enunciation, but I feel like I'm fairly loose this morning. I'm not quite sure if market's going to open very shortly, so I don't want to. I do not want to linger here on this factor. We have news. We have JOLTs. Job opens for April coming out at 10 a.m. We got job openings coming out at 10 a.m. So let's be mindful and aware of that. Right here, we have 3 minutes for the market open. Job openings in the United States fell by 28,000 to 7.192 million in March 2025, the lowest in 6 months and well below market expectations of 7.48 million. The drop was broad-based with the largest decreases reported for transportation, warehousing, and utilities. Oh, that's not good. Down 59,000. Accommodations, food services down. Uh-huh. Construction down 38,000. Federal down 36,000. Real estate and rental and leasing down 39,000. And healthcare and social services down 37,000. On the other hand, job opens increased in finance and insurance by 25,000. Other services by 20,000. State and local education by 17,000. Wholesale trade went up by 10,000, and manufacturers up by 4,000. Regarding regional distribution, job openings fell in the northeast, down 180,000, and the south down 69,000, in the west 76,000, but increased in the Midwest by 36,000. Meanwhile, hires held at 5.4 million, and total separations changed little at 5.1 million. Within separation, quits were unchanged, 3.3 million. And layoffs and discharges edged down 1.6 million. That sources the Bureau of Labor Statistics. I believe those are our numbers that came out last time. So we're looking forward to today's numbers that come out at 10 a.m. and then we'll see where that puts us. So let's hop onto the charts very quickly. I've been on the charts basically all morning. When I say all morning, I really mean for like an hour or so. I had a couple of opportunities to get involved, and I tried to um, see what I can do. Um, but again, now I'm really learning some things that I think that many people ignore, and I'm not going to ignore them anymore, right? I'm not going to do that. Not going to do that. All right, all right. So we can't change up, man. Can't change up. It is what it is. We are who we are. Let's go. So the market is open 9:30 a.m. And what I wanted to just kind of be aware of or make note of is that this low is the Asian session high. This high, this area that's graded in this range, this is the PM session high from yesterday. Prior to the market open, we ran down, touched that Asian session high one more time. We bounced. A little energetic bounce from that. We traded back into that order block, dropped into this gap at this 50% of this level, consolidated along that 75% of that range between those levels, and then we moved up. These areas are very exciting and new to us, so we don't really want to abuse them as much as we have to understand the rules and regulations associated with the way price moves and the way that we can engage with price. So immediately off the open, we've made a rally to the upside. So what are we thinking right now? All right, are we thinking, 930 fair value gap? Is that what we're thinking today? It's a possibility. 'Cause there's also a possibility that we've just run out the highs, ran out the high of the PM session from yesterday, which means that there could be a great deal of liquidity in this area. Okay, so we just took prior day high. Prior day high was here at 21,575. Keep that in mind. Mm-mm. Excuse me. Okay, we're inside of a higher time frame imbalance. Looks like a SIBI to the left. The high of that SIBI is 21,621, and the low is 21,533. All right, so yesterday's high is roughly at the consequent encroachment of that level. We just ran out that high, we turned right over and dropped right down. So the first question I was thinking was, oh, mile, are we going to go long off of this level? Or, excuse me, I think this question is going to be asked pretty quickly, answered pretty quickly. So we ran right above yesterday's PM's prior day high, which is 21,577.50, turned over and collapsed. Just dropped right back in. Ah, ooh, ah, what to do, what to do, what to do. Okay, so this is the this is the PM session high from yesterday. According to my trading rules, these are one of the areas that I should target. I also should wait just a little bit, but I didn't. That this is the area that I've been wanting to target. I'm in early. Well, actually, I'm in late. In late, but let's see if the market has has legs today that it may want to move to the downside rapidly in order to get us into a position prior to the news. Right. 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 Okay. I really didn't want to see us go back above the I don't want to see us go back above like that. But that was my stab at it. Now it could go to the downside without us, and that's fine, right? Or we could have just dropped back into these down closed candles and turned over. Ah, boy. Okay, I'm gonna go ahead and slow down right here. I'm gonna go ahead and slow down. There we go. That's what I was looking for. Excuse me. That's exactly what I was looking for right there. So I think the worst thing that I could see here is a consolidation. Right. That's what I would not want to see. I would want to see price come up and have an immediate sort of reaction to these levels. So at 10 a.m. we have news, and we just ran yesterday's prior day high. We took out yesterday's PM session high. We're halfway to yesterday's Asian session high. Okay, I'm paying attention at this point. What happens here? Right? What happens here between these two candles? Mm, yeah, I don't think so. Don't think so. Cross my fingers. No, I don't mean like this. I mean, I literally laced my fingers because I'm watching price action. And no, regardless of what happened, I didn't really want to get involved here at this point. And I believe that we're going to see us drop down into like a hourly fair value gap. That's what I was looking for at Tuesday's open at 21,460. 21,461.50. Opening range volatility is really crazy. It's really crazy. Mhm. I'm Yeah, I'm watching this level, and I'm not sure if this level would be significant to me. I know that we dropped down to the pre-market imbalance here. We ran below it into this gap. We touched that imbalance 3 times, and I'm not sure how significant that is. I see that the bodies here closed on the 1 minute in this range, which means that the 5 minute candles are also holding that range. This does seem like an imbalance. There's nothing crossing these levels but wicks. However, because we crossed that higher time frame liquidity zone level range point of interest, I'm not so sure that we would continue higher at this point. I mean, because it would be a great area for us to source liquidity and then turn and then go back into the opposite direction. Except we're consolidating at this point. Short term, of course, a short term consolidation. We should all be patient at this point. I should really be looking at higher time frame, looking for confluences, looking for something on the 15-minute chart that might suggest that this is an imbalance or a gap. Although we did close into a higher time frame ISI, consequent encroachment of it. Maybe some sort of inversion. We're lower than where we wanted to be. All of that back and forth price action was extremely confusing and disgusting. I didn't like it. I didn't like it at all. The short that I attempted here, obviously, right, it played out just a little bit later, but it played out here. That's what I was looking for. Hindsight is 90, 90, 90, 90, 90, 90, 90, 90, 90. Okay, so there's the pre-market imbalance here at the 50% level. Pull that forward. I just want to see how we operate as we trade through it. Time of day is still quite early for me to make any type of serious uh approach. And I guess every trade is serious, right? I guess every trade is serious. But some of the trades that I'll take them because of that tunnel vision of trying to get that perfect trade, and then you're sitting there watching the best opportunities in the world go by. We're back to that consequent encroachment of this range from this little graded area to here. Mm-hmm. Time is now 40 a.m. 5 minutes left in the first 15-minute candle. 20 minutes left in the hour. I guess I would say to myself, well, 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 well. And that's all I said. Trade it back to the sub close candle. Put a wick right into the bodies, these two bodies. And we've passed through that level. pass through to the upside. Very good. This wick drops down to this down close candle. These two wicks trade into this down close candle. Hmm. 41. 10 minutes left in the hour. Okay. Looks like an inversion. What am I afraid of right? Okay, so this is what I'm watching. This gap. I'm looking at this gap. What I did not want to do is, you know, get long right here with all of this below. After we left this order block, we popped up, turned over. This, that, and other thing. Words, in other words. Hmm. See, you see what I'm saying? So in that same regard, where here I said to myself, look, ah, go ahead. You see the opportunity. You see where the area that you like. Go for it. Took the trade. It stopped me out. Okay. Right. Didn't like that. But then in this regard, I see this in the exact moment where I said, oh, yep, this is exactly where I want to get involved. Then I'm hands off, and then price just delivers in one direction. Even from here, I'm watching, look, the bodies at the 50% of this range. They all close above that range. All of the wicks are dropping down to these down close candles, filling in these gaps. And then we turn over and we pop right up. 9:43 a.m. Doopy doopy doop doo. Trade that I would love to take would be this one. This would be the trade that I would love to take. I would love to take this trade. Okay, it would be a buy. It would be a limit. The stop loss would be here. Yeah, the stop loss would be here. And the order would be right above the high of the PM session from yesterday, right? Because we went to this PM session, above the PM session, up and above, down and below, up and above. And what I would target would be a trade back into this imbalance off of the, somebody help me, off of the PM session high from yesterday. But I would never, I don't want to risk $450. I have this imbalance down here, risking $450. Don't think so. I'd have to pull my entry down to this level, and that would be the dream level that I would want to take. Because this C is still open, and then this gap is still open. 4 minutes left in the 5-minute candle. Mhm. And the part that I would love to say is I would love to say that's a balanced price range. Oh, excuse me. I would love to call it a balanced price range and claim the price would never go down there, right? Which means that I would attempt to take my entry in the range that we're currently in. Mm-mm. Mm-mm. Mm. And left this area yet. Um, the high of these candles are yesterday's Friday high. So yesterday's Friday high is at 21,576. We re-engaged. We've re-engaged those numbers. Re-engaged that area. There we just breached yesterday's prior high again. One of the things that I don't often enjoy is sitting and watching the chart and not taking a trade. Yep, it's just one of those things that I don't often enjoy because hindsight reveals how safe particular areas were, and then you're sitting here looking like safe Sammy, just sitting. Okay, I'm getting alliterations now. Safe Sammy just sitting here watching price print. Mm, 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 mm. I think the most important thing for us to do is really just keep our hands on the wheel, basically, right? Keep our hands on the wheel. If we have control of ourselves, then we'll definitely have control of our trades. We'll definitely have control of our trades. We really don't want any external element to influence our perspective on price, right? We don't want any external influences on our perspective on price. Whether somebody else would have taken this trade or that trade or anything like that. Let's say this is a balanced price range, breakaway gap, and price never comes back. If we call it that, then I would be looking for 21,574 to push us higher. Mhm. 12 seconds left in the 5-minute candle. 5, 4, 3, 2, 1. New 5-minute candle is open. First, I'm going to watch this area to see whether or not that makes any sense for us to go long here. Great. By the time it makes sense for it to go long, you'll already be long. That's fine. That's fine. Because one of the thing is, I do really definitely don't want to rush whatever the narrative is. I don't really want to rush the narrative, right? I don't want to rush it. If it's coming back in, if it's meant to be, right? Then I'm not trying to rush this. I'm not trying to rush this because I would be the person or the one. Literally, I would be the market maker in this instance, right? And what I mean by that is I would be the person taking myself out of trades. That's the mean threshold. Visual order. It's in the back. We bounced off of the mean threshold of this down close candle. There could be an opportunity to get down below this zone. Am I still bullish on the day? Or am I bullish on the day? I think I am. And the reason that I feel, well, I don't know. And I'll say this. That the elements that I'm watching is the idea that we took out Asian session high and then yesterday's PM session high. Okay. So we would have to be extremely bullish in order to continue in that same direction because we're running liquidity and we're pulling back. But as we're pulling back, right, there's going to be less liquidity to the downside unless we're extremely bearish. But the way price moved yesterday and the way that we've been, kind of scaling this range, we've been showing a little bit of strength. That was the mean threshold of this up down close candle. Wicks body closed well away from the mean threshold. Let's see if I put my stop loss below mean threshold. Where could I put my entry? Put a buy order right there. I got missed. It missed me. It missed me. Because it missed me. We took out the low of this down close candle here. My entry here will provide us. I mean, my entry play placed here will provide us with an opportunity for price to drop back into the opening of closing of this price, or into 50% of this wick. But I don't want to see it go down below mean threshold at this point. 15-second chart shows that my entry could still just be too low and it could just leave and go without me. If it does, um, am I going to throw a fit? Just left me. Yeah, that- that's what it is. Well, there are 24 seconds left in this 5-minute candle. Mm-hmm. The 5-minute candle just opened. I'm gonna take this trade off. This makes more sense. Like something like this makes more sense. If I were bullish, this would make more sense. And this is my logic. My logic is um I can't even do that much drawdown. Who do I think I am? My logic is we're coming into 10 a.m. and that means that we're going to have another hourly candle form at the in the next 4 or 5 minutes. Take this entire order off. So I want to just gauge direction. We're going to have another hourly candle form in a few minutes. And it could move us to the upside, right? However, we could open and have a considerable amount of retracement in order to um, provide liquidity for the movement to the upside. Bop, 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 bum. Jidda-didda-didda-doo-doo. Okay. In the premium of that uh 15-minute SIBI. I'm sure it's an hourly SIBI as well. There's an hourly SIBI in the premium. Price is a little lethargic to me, I think. I think it's moving much slower than I would have really thought because the way we opened with the open range volatility and the range that we were flexing back and forth, I really felt like, yeah, we could really be, on our way to do something. Time will be, time will be. We're gonna get the news in 2 minutes. Mm. Feeling a little sedated today. Don't like that feeling. You know that feeling where you like especially calm. I'm especially calm, almost numb, and to a certain degree, and I don't really like that feeling because I feel like I'm not analyzing as much as I would normally analyze. Maybe that's a good thing. Maybe it'll provide me with a little more clarity. You know, just avoiding that overthinking process. So 40 seconds. News to come out. 40 seconds on news. 40 seconds on news. It's going to have a little bit of jobs data. Jobs data. Okay, it looks like the ES is kind of rolled over on us on the 1 minute chart. On the 5 minute as well. NASDAQ looks a little bit stronger than the ES. The ES is kind of just rolled right over. Here we are at the jobs data. Boom. We were looking for, it's okay, so data spike. The forecast of 7.05, and we're looking at 7.391 million. Okay. Okay, let's see how this moves price at this point. The 1 minute candle, this is just doing some odd stuff right now. It's odd, odd stuff. Okay, so the new hourly candle just opened, and that's what I really wanted to see. I really wanted to see where the close of the last hour is. So this level is 10 a.m. This is where we open, right here at 10 a.m. I'll just do this to remind myself that this is the prior wick. All right, so that's the prior wick. Boom. All of this is the current hourly candle. This 1 2 minutes. These 2 minutes is the very first of this hour. Oh, oh man. We just breached the high of the hourly SIBI. Very, very good. Very good. Okay, time to get a new lens. Hmm. So what are you thinking, little guy? What I think is, where's the opening of the hour? How far into this hour do you think we would dive? All right, how far back do you think we would pull? I think this is a decent trade. This is the consequent encroachment of that SIBI. So we went up above 50% of that level. Once we got above 50%, we turned around, we dropped down. Friday high is here. We dropped right into this level. Then we move above the 75% of this range here, 21,599.25. Then we moved up, we reached the high here, we reached the high here. I think this is, I think this is decent. I mean, I think this is decent for where we are. when I look at the higher time frame, things that always concern me is when I can't really see any level that I would believe that would hold price, right? Like here, like I could imagine like the next hour or the next 15-minute candle could open and drop a wick down to 21,576, right? That just looks like something that could easily happen. Mm-mm. But my stop loss is just shy of that. So it's almost as if my stop loss could really get hit and then X, Y, and Z. That would have stopped me out. It's 10 a.m. We came into this level. Now, I'm not looking for a reversal pattern, right? So normally that's how I destroy my account, trying to catch reversals. And so that's not what I'm looking for. This gap was the first presented gap of the day, right? Either this one or this one. This is the one from the opening. We hit 50% of that level, reversed. Mean threshold is down, close candle. hmm We're down below the opening price of the closing price of the prior hour. We returned to that opening price. Oh boy. Bad. I mean, I know it seems like a bad entry. It seems like a very probably is. I think after all of the time of being bullish, I took the trade because that's normally one of the trades that I'll take. This is one of the trades that I'll take. It's just a retest of the prior hour's closing price. And I think that's all because we just went down to this opening price. I believe that's all we're going to get here. Looking at the lower time frame. If we move down below this area, then what we'll stay in. 3, 2, 1. Looks like I'm just going to scalp a little bit off or what? Nope. Come on. Come on down. But yeah, that's right. I mean, because we're literally at that prior, inside of the wick of that prior up close candle. We just ran out the liquidity above it. We dropped back in, pop up inside of this imbalance, and then boom. But here, it seems like we're turning over at this spot. That's what it looks like. So watching a small gap on the 1 minute. Just stopped me out and went in my direction. Yes, it's practically sideways with this. Do 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 do. Time is it? 10:14. Hmm, hmm. I mean, this is actually the most interesting thing I've ever seen. This is very interesting. This is crazy to me. Not, not really, what's happening on the chart. I think this is actually very normal. I think what I'm really interested in is just my ability to stay engaged with the market uh over the long term, right? More so over the long term. Not like, just jump in and take a couple trades and then jump out, but to stay completely engaged with watching price go through all of the different fluctuations that it makes. And how the entries that I take, and I did a video that I had did not post yesterday, and it was talking about um watching certain price action and then beginning to tell ourselves and program ourselves to make us think that it means something that it doesn't mean, right? So I was telling myself, I said to myself, okay, well, we broke above this level, right? And so we traded out to this point. And so you saw where I took my entry. And you see where I have my stop loss. So I'm telling myself that this down close candle would offer support to price, and then price would continue to move higher from this particular position. Um, in this instance, well, for the moment, that's true, right? For the moment, that's true. And I was sitting there thinking to myself that it's interesting that I would take this particular trade at this point. After I sat back, I sat on my hands, I calmed down, I chilled out, I looked at the market, and I was trying to make sense of what we were seeing, right? And we had this long push down, as if this were like a bullish order block, right? So we ran out liquidity on the news. We popped up, traded down to this down close candle, popped up above that, traded to this imbalance, consolidated practically with the wicks, but the bodies are here. The wicks penetrated, but the bodies moved higher. Then we moved up just a little bit higher. But price is still there's a lot of resistance to price moving up. It seems like there's a lot of resistance to price moving up at this stage in price. So at least take these highs out, right? This is the high of the prior hour, of course, right? So this is the close, and then this is the high of the prior hour, and we're back down below my entry level. Hmm. 3 minutes and 53 seconds in the five. When you market into a trade, I find that these levels are exactly where your market orders are placed. So if I saw a price here, and it drops down into this level, and I buy, right? And I go long as I see us break above this level. This is the area that they're going to give me my stop loss. They're gonna, right? Where they're going to put my entry. And if you watch the bid and the ask here, they flop back and forth, right? So as price is going down, then the bid goes ahead of the price as it's going down, and trying to time and entering at that point, you would think, oh yeah, that's a great place to enter. I'm just going to put a little bit of something on this wick. That's that up close wick right here. 2 minutes left in the five. This is not bearish. This is not bearish. It's not bearish. It seems bearish, but it's not. We're going to drop all the way down in here, and we'll probably run my stop loss. But as soon as it takes my stop loss, then it's going to turn and it's going to go to the upside. So it sucks, right? It sucks, but it only sucks. That's where I put my entry. That's where I put my stop loss. I mean, that's why it sucks. So it stops me out and it turns around and it's going to move up above this the little the wick of this candle and then go higher. Okay. And I know and you could probably hear it in my voice that I kind of have an attitude about this today. It stops me out and then it turns over and then goes up, right? So I kind of have an attitude about this today. I really do. Got an attitude about this. Do. How bad is it? Are we down like what, $900? 1,000. Yeah. Okay. Well, that's it for me today then. Whoa. Whoa. Yep, that's it for me today. All right, guys. Catch you back here tomorrow. We'll attempt to do better. We'll attempt to do better. There it is just right now so many levels that I am uh liking now. I like so many new levels now. And it's not like I'm changing my trading strategy. It's not. I'm really still in the process of refining and dialing it in to see where I am trying to get involved and stay involved. So, all right. Thank you guys for stopping by. Thank you for all of the people who are subscribing to the channel. Thank you for your support. Like and subscribe. I am Grady on the charts, and we'll see you later. Bye bye.